I'd like to welcome everyone to this particular event. We're going to be talking about something I think is particularly critical, which is production insurance and completion bonds with Ed Rowin, who is a 30-year veteran of the entertainment industry, and he provides insurance coverage. His company provides insurance coverage to entertainment industry professionals, specifically producers. And this particular event, we'll be talking about several kinds of insurance, including E&O, general liabilities, workers' comp policies, et cetera. And we'll also be talking about completion bonds, which are bonds that investors frequently require producers to get in order to ensure that a film is going to be produced. So you get your funding, but one of the funding requirements is that you have to have a completion bond. So what I'd like to do to start is take a few minutes and have Ed talk a little about his background in the entertainment industry and sort of how he ended up working in insurance. And then we can fade into talking about completion bonds and production insurance. So would you like to get started?
Sure. As Nancy said, my name is Ed Rowin. I run Rowin Insurance and Financial Services. I was a colorist for 30 years, both for feature films, but primarily television series and network and other types of reality, as well as dramatic and comedy. So I've done a lot of post-production work. In 2010, what happened was I had an uncle that needed some long-term care, and I started looking into long-term care. And from there, I got involved with the insurance company for primarily life insurance and long-term care. And after that, I moved into what's called property and casualty insurance because I had a background in film. I migrated to production insurance and completion bonds. So today we're going to talk a little bit about completion bonds, production insurance, the needs, what's involved, how do you get a completion bond, why do you need a completion bond, same with insurance, why do you need insurance to do your production and make it possible so investors feel comfortable. So first we'll start off with what is a completion bond, and I will go to share a screen. Sorry about this.
No, it's good.
Let me go back to, so what is a completion bond? It's a fairly simple idea, but it's a pretty intense application process. So what is a completion bond? A completion bond is an agreement where the investors and financiers are guaranteed your production will be completed on schedule, on budget, and delivered to distributors. So your investors usually require you to obtain a completion bond as a condition of funding. One of the movies that I'll talk about briefly is Yentl went over budget, and the completion bond company actually paid to finish that movie. So that's pretty much what a completion bond is in a nutshell. Why do you need a completion bond? Well, producers need a completion bond for the benefit of the investors and financiers who agree to make funding strike price available to the producers. What that means is the investors will say, we want a completion bond before we agree to fund the strike price of your production. It's almost always a condition of funding, as you could see. And it's really there to protect the financial interest of your investor, your financier, and in the event the production is not completed on schedule and on budget. But what it doesn't say here is it's good for the producers as well, because we oversee it. where we double check. We do not, a completion bond will not guarantee that your film or production will actually be a success, but it does guarantee to your distributors that they will have a product at the end of production. And it falls in accordance with the completion bond agreement. So we'll move to the next thing, which will show really, this is the process of a completion bond from A to Z. The first thing that happens is we issue a letter of intent. So how do you get a letter of intent? We assess the screenplay, the budget, the production schedule, the financial plan that the producers and accountants put into place. So that's really the beginning of the process. In the process itself, the letter of intent is extremely important to your investors because it shows that the bond company has confidence that you will complete your production on time, on budget. The next process is actually more a legal process. We go through, we want to meet and approve your directors, your UPMs, the accountant. We, again, review schedules, budgets, financial plans, strike price, cash flows. We look at the schedule, the film workflow, the post and delivery plans. Next, we move on to executing the guarantee. It's, you know, we again, we approve the financial plan, we approve the strike plan, the insurance, the post schedule, the delivery schedules. So we're actually saying, okay, we are going to write a completion bond for your production, and we guarantee that it will be on budget, on schedule, and delivered. Then monitor your production. We need dailies every day, call sheets, production reports. If you change a script, because we all know, you know, scripts change, schedules change, weather could create changes in shooting schedules. We'll need all that information as well. We get cost reports, daily cost reports. Then we go into tracking of the post. We look at the music. We want, in the legal process, what it doesn't say here is we look at your agreements with music, title reports, to make sure that everything is legal, delivery, and when do you deliver, and then we go to delivery. So that's pretty much it in a nutshell, how the completion process works. So then, you know.
Actually, before we leave this page, you refer here to two questions. First thing is, you refer here to a strike price. So what's actually included in the strike price?
Okay, what the strike price actually is the strike price is your production costs, complete production costs. We need to know above the line, below the line costs, insurance, fringe, union fees, union costs, payroll fees. It's post-production fees.
P&A?
What?
P&A?
Yeah, we need to know all your financial costs. It does not include any kind of marketing costs is not included in the strike price usually. Marketing, things like that. Let's say you have a deal with a post facility that they're going to let you use their facility and provide you, you know, post free of charge because you're giving them points in your production. they will, we will need to see those agreements as well, to make sure that they're going to follow through with what they agreed upon. So it's a lot of times it's for your benefit, but that's what we fund on. The bond is based on the strike price or production costs of your production.
So you shouldn't. So the second question I was going to ask is, you issue a letter of intent at what point in the process? So if I'm a producer and before I start approaching investors, I should come to you with my UPM or line producer and the screenplay, budget, production schedule, finance plan, and then you'll issue a letter of intent. Is that correct? And then once I get somebody on board for funding and create all the subsequent documents, then I bring it to you to actually get the completion bond, or do I, because I might not know the finance plan until I know who the financier is, correct?
Yes, but before any investor or financier or bank will consider providing funding for your production, you're often asked for a letter of intent from a completion bond company. And what this does is it really demonstrates that a bond company has said, yes, this production will be on schedule, on production, so an investor will feel more comfortable with your
right. And so as part of the closing instructions for finance, before money starts getting put into a bank account, one of the escrow instructions will be the completion of the bond? Or when does the bond actually underwritten? It before funding or immediately after funding, or?
A bond is actually, we'll issue a letter of intent before funding. Mm-hmm. But the bond is actually issued after we have proof of funds.
Right. So you're saying that before funding, you will go to before funding, that people should come to you when they're putting together their PPM and all that stuff. They come to you for the letter of intent, and then when they actually get an investor interested who says, "Yeah, I'll put up the money for your project," or a bank's interested in putting up financing the amount that you expect to get from state rebates. At that point, people will come to you and they'll say, okay, we want to go forward. And that's when you'll say, okay, so at that point, because what you need to have before you can get this is the cash flow. You need to know when the money is going to be coming in, and because the bond company needs to know that you're not going to run out of money at, week 3 or week 4.
Correct. We look at your financial plan. We make sure that your financial plan is a good financial plan, and it meets all the requirements of the bond company. Mm-hmm. Your production schedule is a good schedule, that you have everything organized. The budget is there. So we look at all those aspects, and we evaluate whether or not this production will be on schedule, on budget.
Right. And if it's the case, if you're looking at the cash flow, so people might not know what a cash flow is. A cash flow tells you week by week how much money is going to be in the bank account. Because what happens is the investors and financiers rarely put all of the money into the production bank accounts at one time. They sort of put it in as you reach certain benchmarks.
Correct.
So what you can't have happen is for the cash flow to be, you need to front load the cash flow so that you can be sure that on week 3, when you're shooting the big stunt scene, that there's enough money in there to cover the actual big stunt scene that you're shooting.
Yes, and we get into, from a financial standpoint, we require a contingency allowance. Mm-hmm. A pretty standard contingency allowance is 10%, mm-hmm. Which as we go along, we'll get a little more involved into what's required with the contingency. We always require a contingency. because what happens is we don't want you to run out of money. We don't want to pay any kind of overruns that the production has.
Mm-hmm.
So we look at all those aspects of your financial plan and cash flow and make sure that everything's in accordance to our bond agreement.
Right. And if you see somebody, if you look at a project and you don't like the UPM, or like he's had problems in the past, or you don't like the lead cast, or you don't like the director, I mean, you'll refuse to do the bond, right? Like, in other words, you have like requirements in terms of cast and crew as well.
For the crew, for the director, if he has a lot of issues, your bond costs might go up.
Mm-hmm.
A UPM, same thing. We do have approval, but it's pretty rare that we'll say, you can't use this UPM, you can't use this accountant. They can. What happens, and we'll go through a little more of that, if all of a sudden costs get a little out of control, we have the right to take over your production.
Mm.
And at that point, we'll come in and say, okay, first we'll put someone on your set. We'll put a representative actually on the set. We hope it never comes to that, obviously. But we'll put a representative on the set of the production, and, worst case scenario, I mean, we'll pull a director off the production.
Wow.
We do have the power in the agreement to take control. So that's the reason that's important, is that people need to know that the bond company is an active, and it has a very active role in the production. It's not like it's not like insurance where you're never going to see the insurance guy. It's like they're going to be tracking you. No, I'm kidding. Yeah, the bond company, we get dailies, we get call sheets, we get production reports, script changes, schedule changes. If your costs start getting a little out of control, we want to know why they're going out of control. We have a lot of control of the production as far as financial goes.
Mm-hmm.
But it's good for the production as well.
Mm-hmm.
We're double checking your production as well. So it's not, it's not a bad thing. We're there to keep everybody honest and to keep your production cost in the realm of what we agreed upon. Your investors want us to keep it in cost to what was agreed upon as well.
Cool.
So
we can go on to the next. I'm sorry I interrupted you. I just don't want to make sure people understood the strike price and understood when to approach you.
Yeah. We before your production, and once you have a schedule, a budget, a screenplay, and a financial plan, that's really when we first start doing our assessment of of whether we're going to issue a bond.
Okay.
So we work with you, with your producers, very closely throughout the production till delivery. We don't guarantee that your delivery agreement, if they say at the end, we're not going to give you delivery money or our agreed upon, price. We don't guarantee that, but we guarantee that there will be a product to deliver.
Cool.
Okay, so whoops, sorry, I don't know if you saw that. Okay, so as we spoke about before, how do you get a letter of intent? Well, like we mentioned, investor, they'll want to see a letter of intent from bonding company before they issue funds. And like I said earlier, it demonstrates that there is interest in bonding your production. and the bond company has already assessed the production and approved the screenplays and the budget and schedule and financial plan and said, yeah, this is a doable production. So that's very important. Like we mentioned, what's needed for a completion bond? Obviously, you need to enter into a completion agreement. It is a legal document, so I suggest you have a lawyer look at the agreement. We want to see proof of funds, like I mentioned. If it's a lower, if the completion bond is under $5 million, usually, we'll actually want to see some collateral as well. If you have proof, we will need proof of funds, because we're not going to give you a completion bond without proof of funds. You need a screenplay, a budget, and it includes what we called, what we spoke about earlier, as contingency allowances, insurance, fringe, cash flow schedules, shooting schedules. So as you can see, we are very involved, like I mentioned earlier, in your production from day one through delivery. During the production and post-production process, we'll need schedules, we'll need call sheets, rap sheets, all reports. We do, I keep mentioning it, contingency allowances is so important. We need proof of insurance, which we'll get into a little later. We want to know that your production is insured. So we'll need some kind of proof of insurance, which our company does provide, full production insurance. And then, you know, we have a funding agreement, letter of credit, control agreements, power of attorney for the producers. So we look at the title reports, making sure everything is on par. So what should you budget for your contingency? A general rule is 10% of the direct production costs. So that's pretty much standard. In certain situations, a producer or director may, because you want that 10%, they might defer payment for, you know, producers, directors might, and other key personnel as well, you know, UPM or a cinematographer may defer payment. So you do have that 10% contingency fee, which is required for the bond company. So that's something that is important to have.
Mm-hmm.
So what should you budget for the bond fee? You know, this is, it really depends. Like I said here, a standard fee is usually 6%, but it can be more and it also can be less. We look at the experience of the directors and the producers. If you have a director and producer that consistently go over budget, it's going to be a higher cost. If you have, you know, key personnel that are real tight on budgeting, it might be a lower cost. And we will work with producers. Sometimes it'll be a higher cost. We'll charge 10%. But if there's no claim, we might rebate back 5% of that. So if there's no claims, you know, we might have a higher upfront fee, but in the rebate, assuming that you stay on schedule and there are no claims, it might end up being a lot less expensive. So fees there are several factors. The budget, shooting location. If you're shooting all over the country in different parts of the world, it might go up because we look at that. It might extend it. Like I mentioned, the experience of your key personnel. And what's the complexity of your production and post-production? I mean, are there a lot of effects? Are there a lot of stunts? Are there aerial stunts? These are
aerial stunts. That's humorous.
these are all things that extend or could extend the budget, increase the budget, and extend the schedule by quite a bit. I mean, we've all seen it in certain features that, a helicopter crashed or, something like that, which obviously it's going to extend budgets and things like that. So what is the production risk? And all these are factors into how we budget a bond. So the rights of the bond company, I mean, we are there to protect the investors and the production. So our responsibility is to make sure that your investors come in, that the production, comes in on budget, on schedule, and you deliver on schedule. So there are terms that are agreed upon at the beginning during the legal process. We do have the right to monitor and oversee the progress of your production.
Mm-hmm.
Like I mentioned earlier, if you're have cost overruns, we'll put someone on the set to oversee it and help getting those costs down.
If it's the case that the bond company actually has to pay out, does the producer have to pay back that money, or is it the case that's basically what the insurance is for?
No, if a bond company has to pay out because of cost overruns or something like that, yes, we get the first dollar that's paid. If you have a distribution deal, we will get the first payment from that distribution deal. So we get paid first if we put up money to complete your production. That's also in the agreement that we get paid first. I mean, if we outlay money, we want that money back.
And that's even before the bank?
That's even before the bank.
Right, so if the bank loans against money, you're even stepping in before that.
The bank knows that we're going to step in before that.
Wow.
Yeah, banks who finance, like PNC Bank,
Mm-hmm.
or Bank of America, they have entertainment departments. Some banks don't, but Bank of America, PNC, Wells Fargo.
What's PNC? Is a Pacific Mercantile Bank? Or who is it?
I don't know. I think it's Pacific National something. I don't know what the PNC.
You just go ahead and call it PNC. Right?
Yeah. But they all have entertainment departments,
Mm-hmm.
and their entertainment department demand completion bond, and they know that the completion bond company is getting they're going to be repaid first.
Cool.
So
that makes good sense.
Yeah, if we put up money, in a perfect world, we don't want to have any claims. It's considered a claim, and we do things like I mentioned earlier. We assess our rights to take over some or all aspects of the production. First, we'll put someone on the set, and
if you take over the production and thereby fire the director or whatever, does the producer have to pay you for the cost of you taking over the production, or is that covered by your bond fee?
That's the bond. I mean, if we've taken over the production, it's gotten out of control.
Right, but people don't have to compensate the staff that you bring on board. You take the money that's already in the budget for those people.
Correct.
Okay.
Yeah. There's a couple, The Adventures of Baron Munchausen and A Thief and a Cobbler are two movies that the actual Bond company they stepped in and taken over and replaced key personnel on these features.
Mm-hmm.
So it's rare that it happens, but it can happen. And there's a lot that goes into that before we'll take over a production. I mean, it really has to be out of control.
Cool.
So, and that's pretty much it for my PowerPoint presentation.
Right.
And I'm back.
And then you're going to talk. So the next thing you mentioned this previously, you talked about the fact that in order to get a completion bond, the completion bond is going to expect you to have sort of the normal production insurance, which means producer's insurance, which also means workers' comp, which SAG requires you to have in the state of California.
Yeah.
And then you also talked about the fact that you'll need a general liability policy, and then you'll need so the process of getting the bond assumes and looks in the budget to make sure that you're budgeting the correct amount for all these forms of insurance, because these two can step in when your village gets wiped out by a hurricane or whatever you've insured for.
Yes, the insurance will cover costs. If, God forbid, there's a hurricane or something like that, obviously it's going to extend your production a little bit. That would be an insurance claim, not so much a bond claim. The bond comes in if the delivery is not on time, but if the insurance will pay to extend that, your crews get paid. Like we spoke about earlier, your key actor or, main actor or actress gets sick. And
that's actually, I think, something that we should spend a few minutes talking about. First of all, I'm going to mention a name of a kind of insurance, and you're going to give me a quick definition of what it covers. So workers' comp. Okay.
So workers' comp will cover any kind of injury that happens at the workplace. It's I know it sounds a little general, but that's pretty much what it is. So it covers, someone trips and falls, they get injured. It will cover, and they're an employee, so it will cover their.
Does it cover contractors as well? Because usually directors and so forth would be a contractor, maybe not an employee, or would they be an employee?
They would be considered in production wise. They're considered employees. I mean, it would cover if they got injured. Yes.
Cool.
We'd have to look at their actual agreement. It may or may not, but usually it does. The guilds and the unions and all that require that there's workers' comp for their employees, for their people. For their people. So it covers that. General production insurance is covered under what's called inland marine. So that would cover your cameras, your lights, the cost of camera got destroyed for whatever reason.
Rental locations?
What's that?
Rental locations, like the locations you're renting? Or would that be a separate policy for specifically?
That would be liability. Yeah. So we would cover, the stage or something got, a perfect example is, again, something we spoke about a few days ago. Someone thought there was asbestos on a stage, and that was an insurance claim because once he called safety, production stops. So production stops, they get everybody off the stage, and hazmat comes in and does their review to see if there is actually asbestos. This is an actual situation that happened. So they come in and look, and in this situation, there was no asbestos, so production was delayed almost a week. By the time they evaluated whether or not there was asbestos in there, they took samples all over. So that was an insurance claim, because you still have to pay your personnel, your actors, everybody else.
So that was a producer's insurance claim.
That was a production insurance claim.
Right.
Yeah.
So it wasn't a liability claim, because it wasn't like you'd rammed a truck into the side of the building and cracked the foundation or whatever, and so you didn't have to repair the truck or repair the building. That's a liability thing. But the producer's insurance covers the production against unforeseeable delays caused by things like this. Like if the leading actor gets sick, which happens.
Right. If the leading actor gets sick, that's actually covered under the cast insurance, which we provide. And
is it is the delay to the production covered by the cast insurance, or is just the cast being, or so the cost associated with him being sick and delaying production would be covered by the cast insurance?
Yes, it would be covered under actually it's all covered under the general liability, and the cast insurance is part of that. General liability also has complete production operations, so is part of the general liability. So for any reason, should the production be delayed due to uninsurable event, it would be covered. So we want to make sure that that's covered. We want to make sure that all your equipment is covered. I mean, in today's day and age, you rent an Arri Alexa. You have two Arri Alexas with lighting packages and lens packages and everything else. It could run into hundreds of thousands of dollars. So the camera rental facility is going to demand insurance just to rent their cameras and packages, lens and lights. And that's all covered under what's called inland marine. So we cover all the equipment costs. We cover the cast, we cover the production cost should there be a delay due to an insurable event.
You also mentioned, actually, the interesting thing about the cast insurance is that the cast insurance has specific requirements in terms of what the cast can't do. Like none of this jumping out of a plane. No, you're not either going to go, like you mentioned, riding on a motorcycle and so forth. There's things that the cast can't do because they're currently being insured. Because if they get hurt, it could cost.
Right. We are there to protect the production. The difference between insurance and a completion bond is the completion bond is really there to protect both the production and your investors. Production insurance is there to protect the production against any kind of unforeseeable acts.
So let's say that I'm running a production and I decide that I don't need workers' comp, and somebody decides to climb on top of a ladder and falls down and cracks their head. What happens then?
Well, first of all, if it's a SAG or any kind of guild, they're going to demand as part of their agreement that you have workers' comp.
But let's say that you don't. What happens then? Let's
assume you don't have workers' comp, and we'll do the worst case scenario. Someone gets injured. They've gone to the hospital, and the physician actually reported to the workers' comp board that there was no workers' comp insurance for your production. The workers' comp board will come down, first of all, and there are penalties per employee per day that are fairly high. And, they could take if you own a home, they could take your home away, that cast member that got injured or crew member that got injured. I mean, there's serious liabilities to not having any insurance.
Right, and does it matter whether or not they're employed or not, whether or not you're paying them or not paying them?
No. Even if someone is a volunteer, They said, or an intern, which happens a lot. People think, oh, they're an intern, I don't need to insure them. They still need workers' comp for that intern. That's actually the law. I mean, that's a California law. So as a production company, you have to insure the people working for you, whether they're paid or not paid.
Is that true? Like, let's say that I'm shooting in Georgia. So, or I'm shooting in multiple locations. How does that even work? Can your company provide, workers' comp across the United States? Or do you have cooperative deals with other insurance companies?
If you are a California company and we're a production company and we're insuring you in California, that will carry over to Georgia. We insure the full production, whether it's in Georgia or, Texas. It doesn't matter. We'll insure the production. But if it's a Georgia production company, honestly, I'm not licensed in Georgia, so.
So, but the insurance, you're saying that the insurance follows is for the whole company and it follows it nationwide. So
Correct.
all the insurance that you can buy the insurance here, and then it will cover the entire production nationwide.
Yeah, I mean, the general liability and inland marine and cast insurance, the general production insurance, we cover that worldwide.
Really?
So, except there are some exceptions. Any kind of war zone we won't cover.
So you mean to say if I'm shooting in Iraq, let's say?
If you're shooting in Iraq, you're on your own. We would not cover production shooting in Iraq right now. Right. But if you were shooting in London, we would cover a London production. As long as you're a California company, we will write production insurance worldwide.
Great. Now, you also talked about, when we spoke last time, one of the things that I thought was really important for you to talk about is E&O insurance and when people should approach you for it. Like whether they're doing a documentary or they're doing the normal feature film, and what the E&O insurance, errors and omissions insurance, covers. Because people don't realize what it is, and it's actually really important.
Yes. So producers' error and omissions were completely different than all other errors and omissions. It's really there to protect the production and the producer. What's involved in that is, again, it's like a completion bond. We get very involved when we talk about E&O insurance. We want to make sure that your title, your script, is you won't be sued because someone said that's my script. We mentioned not too long ago was Stairway to Heaven. Was in a lawsuit recently because Spirit, another company, another music group, said they stole my song. So that's actually an insurance claim, and the E&O insurance on the production will step in because we've already done our title reports, our searches, in addition to your title report. So we want to see that, and then we take it a step further. We make sure that all your agreements, all your contracts, everything is up to par, that there won't be an issue. Should you get sued for something, we step in and we provide your attorneys. We will pay the fee up to what the limit of the insurance is.
So let's say that I hire a storyboard artist to work for me, and then I decide, and then you check my contracts to make sure that all the work product from everybody that works on the project, all of the contracts with them give me the ownership of the intellectual property they create. It becomes part of the work product that goes with the film. So so later they can't come back and say, oh, you can't use those storyboards in the book that you want to produce with the screenplay in it because because it's my work product. It's like, well, no, the contracts cover all of the intellectual property. You look at all the intellectual property contracts to make sure that people aren't leaving these gaping holes that later you can get sued for. Like when people say, well, I gave you the right to produce this particular film, but only to distribute it here in the United States. I only gave you the US rights, like some weird stuff they could just put in the contract that we wouldn't necessarily recognize. You guys will recognize.
Yeah, our attorneys will look at all clearances.
Mm-hmm.
So even to the point of a magazine, you're going to use a magazine, a song,
Really?
a trademark. So let's say you have an agreement with a placement company to have Coke all over the set, or you're only going to use Ford cars. We want to see those agreements as well to see what they say, and to assure that if you have a Ford car, let's say, a lot of times in their placement agreement, they'll say, you need to show our car for X amount of times, for, it needs to be shown 10 times for 5 minutes in your...
You mean for product placement? For product placement, you
Right.
actually want to see the product placement agreements as well.
Yeah, we'll want to see those product placement agreements and confirm with the producers and say, okay, this says you need to do this according to your agreement. So that's all part of the E&O insurance.
Cool. And when it comes to people who are producing documentaries, your E&O insurance makes it so that your attorneys check for defamation and check for those. And like if I decide that I want to say Marilyn Monroe had an affair with Robert Kennedy as well as Jack Kennedy, your attorneys will actually look at that and say, okay, public figure and they're dead, so that might be okay, or maybe not.
In something like that, we'll want to see your script. If you have that in the script, the attorney is going to tell you probably to pull it out.
Really? Mm-hmm.
Because there is a risk to that, because
Mm-hmm.
Marilyn Monroe has an estate, Robert Kennedy has an estate, so there is a liability to that, and we will have you pull that out of the script.
Mm-hmm. So I guess one of the reasons that I thought it was important for you to mention this is that a lot of times producers see the costs associated with insurance and they think, well, I don't want to pay that cost, and they try to sort of minimize it when really they need to be thinking about the fact that the thing that you're protecting them from can be the kind of thing that causes them a lot of trouble. And I think one of the other things that we talked about was that people have a notion that they're judgment proof. I don't have any money, so I don't care if I get sued. Well, are you ever going to have money? Because if you ever have money,
yes,
they can start the lawsuit today and garnish your wages for the next 50 years.
Yes, they can come after you, make your life miserable. So you're not judgment proof, and producers E&O is very important, and a distributor is going to also require you to have producer E&O, because they don't want to be sued over your production for distributing your production as well. Mm-hmm. Even though they have their own distributors E&O, but they want to make sure that you're covered and that you've done your due diligence to protect yourself as well as the production. I mean, really, there's a risk to all this, and what the production insurance, whether it's protecting the cast insurance or a general liability or the camera, we're there to reduce your risk. Mm-hmm. So it's very important, and producer E&O is extremely important because you want to make sure, one, that everything you've done, you're judgment proof, and mm-hmm. that's what we're doing with the producer E&O.
You're the one that's going to go to court, so nobody has to worry about you going to court.
Right.
Nobody has to worry about getting sued.
Right. We're the one who's going to take on that responsibility to the limit of your liability. So we'll take on that responsibility and say, we'll provide attorneys for it. We'll provide but we've already done our work to make sure that, you know, the title is correct. The script, should you make changes in the script, that presents a whole other issue. I mean, we're basing this on an approved script. Same with the completion bond. We're basing it on.
But somebody can reach out to you and say, we have to make the script change, and you know, how's this going to impact? And usually the changes if it's just changes to dialogue that aren't going to impact anything, don't bring any new elements in, it's one thing, but it's a different thing if you're now going to you're going to replace one of the Fords with a Mercedes, you know.
Right. That could be an issue. If you were going to change the script, like you mentioned earlier, that
it didn't have Bobby Kennedy in it, and then all of a sudden does.
Right. And now he's sleeping around with Marilyn Monroe. Well, that's an issue, and we would need to know that because
the attorneys have to look it over. So, is there so when should people approach you for the production insurance? Should they approach you with their screenplay and their budgets to get the final figures? Like, do you have a figure if should they allocate 5% of their budget, do you think, mostly to covering the insurance they need as a rule, or how much?
Again, it depends. I mean, I'll quote any production beforehand and give them a rough estimate. I mean, we won't do a thorough, like, go through every little intricacies, but they'll get a real good idea of what those costs are. I just did one last week for a feature that's, you know, hopefully happens. And we go through and we look at what the stunts are. Obviously, stunts bring in a whole other realm of insurance. You know, if it's just a dramatic show with no stunts, and the insurance costs are going to be a lot less than if, you know, you have people jumping out of planes and.
Right, but you also mentioned one of the things we talked about before, and because I'm a bad person, laughed about, for which I'm profoundly sorry. The fact that a lot of people don't realize what a stunt is, and for example, leaning somebody back in a chair is a stunt.
Yes.
And then George Clooney, for those of you that don't know, George Clooney was, I think it was a set of Three Kings. I'm not actually sure. I could be wrong. But he was being leaned back in his chair. They were doing a torture scene. And you would think, you know, how much trouble can you get leaned back in your chair? But he fell. And it actually punctured his brain. Brain fluid was leaking out is the problem we had. So he ended up having a headache, ended up going to the hospital. And it's pretty bad when you break George Clooney and you haven't budgeted for stunts, because it might be expensive.
Yes.
You have to actually do stunts.
Anything that is possibly injury or like that, you know, climbing, falling, fighting, driving, those are all stunts. I mean, you know, if you're driving, we spoke about this, and there was a commercial where they had a very expensive car, and the actor in the commercial thought it was a good idea to see how fast this car could actually go without the permission, and that was his last day of shooting, because the car insurance, the company that insured the car happened to be on the set and said, this guy cannot drive our car anymore. So we need to know what's going to happen. It needs to fall within the agreement. But anything, like I said, any falls, any climbing, any air. So a lot of things are considered stunts, but we go through your script and we'll look at something and go, well, what's happening here? Is this person falling? We see a fight scene, that's considered a stunt. So we'll look at all that.
So you'll actually identify when you're going through the screenplay what the stunts are. So people
We
don't have to guess. The people don't have to guess, is this stunt, is this not? If you see something, you'll highlight it, you'll ask them, they'll answer the questions, and then you'll let them know.
The producers usually tell us what these stunts are, but we look at the script and go, well, what about this?
Okay. So,
And I do have a production application which will show some
cool.
of it. Let me see, where is my production application? PowerPoint. I believe it's here. Sorry about this.
Oh, it's cool.
This is an E&O application, which will show you some of the things that we require for E&O. You can see it's a fairly extensive application. From the top, you can see we want a detailed synopsis of the production. We need the budget. We don't need the budget like a completion bond. We're really only looking for the budget of, we only need the top sheet of the budget.
Mm-hmm.
We want title reports, and you can see some of the, we want to know what your insurance history is, because if you have a lot of claims, it's going to affect the cost of your E&O insurance.
Mm-hmm.
Just like with your auto insurance or home insurance, if you have a lot of claims, it's going to affect it. Does the production involve animation, pornographic material, any kind of ride-alongs, hidden cameras, pranks, things like that? Pranks get into, when you're talking about reality shows, that will increase costs. We want to know who the clearance attorneys are. We want to know all the licensing, clearance, the consent, and, what have you done? And we want to see the contracts. So this is only, a few of the pages. We want to know the merchandising that you're going to be doing, because
right, but it's all question. You say it's a lot of pages, but the nice thing is at least it's fill in the blank. It's like it's not like,
for the most part, it's fill in the blank.
mm-hmm.
So that's what we require for the E&O insurance. Now, this is a production application, so it's quite a bit different. And so, as you can see from here, we want to know the cast schedule. We have a form for medical that has to be filled out for key cast members. Obviously, someone like, someone who has one line in your production, we're not looking at, but we want to know that the main cast members, we need the medical certificates. As you can see, there's a stunt schedule. We'll need a synopsis. Again, we'll need the budget top sheet. Top sheet, for anyone who doesn't know what that is, the budget could be 50 pages, the full budget of a film or feature or even a TV series. But the top sheet is going to have a synopsis of just our production cost is this, our fringe is this, our insurance cost is this, our payroll is going to be this. So it's really a one sheet or two sheets that explain what the budget is, and the rest of the paperwork breaks everything down. So we'll need certain things on here. As you can see, which we spoke about, any unprotected or open heights above 15 feet, we want to know about. So if somebody is climbing up something, we need to know. Again, we want to know your insurance history. Do you have claims? Have you been denied? I will tell you, I could get insurance for just about every production, even if you have been denied.
Mm-hmm.
I work with quite a few companies. It's rare that I won't be able to get you insurance.
And you can, and also because you work with so many companies, you can do different pricing, which I think is important too. Because I know that some production companies specialize in some kinds of productions. You know, some are really only ever want to do stuff with zero stunts, just talkies. You know, just talking things. Some people only want to do documentaries. Some people only want. So you need to. That's why it matters which companies you're working with for which kinds of policies.
Yes, obviously, if it doesn't have stunts and it's just talking heads, it's going to be a lot less expensive for your production, for your insurance costs, than if it's a, you know, an action film with you know, car stunts, aerials, things like that. It's going to run into quite a bit of money. That's why there's really no set percentage, because we need to know what's actually involved.
Cool. And you would really only pay the production insurance after you know that you're going to get funded, and you know that somebody might approach you to get quotes to find out what the numbers are going to be, to put them in their budget, assuming their producer doesn't, their UPM doesn't know, but they don't have to pay until funding's in place, because it's part of pre-production that you start getting these policies in place. Correct?
Correct. You know, if it depends how involved the feature is. If it's, you know, they're looking for completion bonds, the completion bond company, right after they do their initial assessment and letter of intent, the next thing is they want to know that you have insurance, because if there are cost overruns due to an insurable or unforeseen act, the insurance company picks up that cost. So they want to know that if a cast member is now sick, gets the flu for 3 days, and it's a $300,000 cost to the production, well, who's going to pay that $300,000? It's going to be the insurance company.
Cool. But yeah, exactly, not the completion bond company. Cool.
Right. So you can see we get into key personnel. Here's the stunts.
Animals. Animals is always good.
Animals, we don't like animals from an insurance standpoint or a completion bond standpoint, but
it would be okay, except chimpanzees bite. That's kind of the thing. It's like it's all good until you get bit, you know, and then it's trouble.
You know, yeah, and you know, should you be riding a horse, let's say, and something happens to the horse, and now that horse, you know, the horse breaks a leg, God forbid. Well, that's an insurance claim.
Not to mention hard for the horse. Yeah, that animal thing is always like, it's so daring to get involved with the animal thing. I mean, I appreciate that it must be done. And in fact, I think Westworld, I was watching, it's funny because we're preparing for this thing, and I was watching Westworld, which is actually a pretty intense thing. And there's horses everywhere, and there's stunts everywhere. Like, my goodness, this is a project.
Without a doubt. And those are all insurable. So all that is insured. I mean, the animals are insured, the stunts are insured. You know, there's a lot of guns and like we spoke about, blanks. Oh yeah,
tell them about blanks, because they probably don't know. A lot of people don't know that thing.
You know, sometimes Nancy and I spoke about this a few days ago. I'm trying to remember the actor's name. I should have actually looked it up. But there was an actor who thought, well, it's a blank. It can't hurt me, and held the gun to his head and fired the gun and killed him. So blanks there's quite a bit of force that comes out of a blank. So you know, we take all that into account if you're using guns, blanks, things like that.
Yeah. So it's, I mean, and the thing is that, again, you might be, as a producer, you might be really smart, but the question is your crew smart? Because who would
and cast?
Like who would think to tell someone, hey, did you know that blanks hurt people? That they're small charge bullets. You know, they're small charge. They will hurt you if you point them at your head. Because you wouldn't think to tell people that, or you wouldn't tell. I mean, you know, you really should kind of always have a safety lecture for your people during a production, at the beginning of the production.
Yes.
But you should be aware that people, when they're in a hurry, are going to want to stand on the tip top of a ladder, even though it says don't go past this point. They're going to want to, and so you can't control what they're doing. You can't be everywhere every single second.
And if it's a union shoot, the unions actually do a full safety with their personnel. They go over everything. They're awesome when it comes to safety of their people. It's really a good thing. So as you can see, inland marine, what we spoke about covers pretty much everything. It covers all your rental equipment, your rented props, your sets, jewelry, furs. It covers, in today's day and age, not too many people are using negative film, but it will cover your storage devices, even though it's not on here, because visual and digital image it covers, but it covers all your storage. Faulty stock in the old days. Now it's hard drives, so it does cover all that. So it really covers everything, including your accounts receivable and your accounts payable. Not accounts payable, but valuable paper and money and securities.
Yeah, like in other words, if you happen to have your accountant your production accountant decides to disappear and move to suddenly and unexpectedly take your money and move to Brazil, like the insurance company covers that.
Yes, we'll cover that loss as well. Yeah, we'll cover that. And as you can see here, it covers cast coverage. Then there's a separate cast that will cover, and we cover personnel with sickness and also without sickness. We cover even family bereavement as part of this. So
like if somebody dies and has to be flown home and then has to come back.
We don't cover the actual flight, but we'll cover if production has to shut down because of that. We'll cover the loss in the production costs.
So if somebody's gone for like 2 weeks, you'll cover the entire production delay?
Well, it really depends on the cast and how important they are and if they could shoot around it. We'll take a look at what could be done. But yeah, we'll cover 2 weeks would be a little hard to swallow, but a week we'll cover the 5 days of shooting.
It would get missed because of the missing.
If it was a key member.
What's excess liability? Is that kind of like an umbrella policy?
Excess liability. Oh, yeah. Yes, that is an umbrella policy. That's a separate policy. That's not part of this. Any kind of excess liability. Remember, this form only covers up to $15 million as far as production goes. So if it was higher than that, we'd have to go to yet another form, which is a little higher, that has some of these things that are not available on here. Something that you're looking at on here, again, another form that we would need is hired and non-owned auto liability. And what is hired and non-owned auto? So you tell your production assistant, your PA on the to take the hard drives from that have the dailies, and now he drives to the facility and gets into an accident and gets injured. So it's his car, but it's actually the production does not own that car or that auto. So it would fall under hired and non-owned auto. So anything that you're hiring as far as a car or person to take from any material from point A to point B, your production has to have hired and non-owned auto.
Cool. Because otherwise it's not covered.
Otherwise it's not covered, and that could get you into a pretty nasty situation too.
Nothing like having to shoot in a whole extra day or 4.
Well, it's also if the person driving the car is injured, that falls under, or he's in an accident and injures someone in the other car, and it was his fault, they can come after your production.
Because it's basically business use of his vehicle.
It's business use of his vehicle. Even if you ask a PA to go get,
Coffee.
That's business use of the vehicle. So,
I heard about that story too. This woman was in a car accident. She was, oh my God, she was on a, oh, it was really weird. She was not a cheerleader, but like a dancer. And they'd flown her out here to do some event, she and 4 other girls. And they were in 2 different cars. And she got hit from behind by the person that was driving the other car. And they didn't have that insurance. So they didn't want to admit that they were the one that had hit her. So she ended up really badly injured. And she told the insurance company what happened. This car hit me, and then they denied it.
Because
and you know what? She ended up, it's like she had to sue. She had to sue because the insurance company said, well, you're lying to us. The car insurance, the rental company said, well, you're lying to us about the accident because these people say it didn't happen. So how did our car get hurt? And how did she get hurt? So it was a bizarre experience. And it was because it was that hired car situation. It was like they were just in this really weird situation where in effect, she wasn't insured. It was business use of a
personal vehicle. You're not insured for business use of your vehicle unless it's insured that way. As you can see, we get into payroll, and this is a workers' comp section, and then
cool.
basic information, and so we go through again, and we make sure that you're protected. I mean, I don't know how much more I could emphasize. We're there to protect your production. With the insurance and with a completion bond, we're there to not only protect your production, we're there to protect your investors as well.
Cool. So we should probably since we've been on for about an hour and 10 minutes, I want to make sure we should sort of ask people if they have particular questions. And what I like to do is, if you have a question, there's a Q&A button at the bottom of the screen, if you happen to be looking at a computer, or alternatively, you can send an email right now to nancy.fulton@yahoo.com, nancy.fulton@yahoo.com. And I think the question I almost always get almost immediately is, are you recording this event? And the answer is yes, I am. And what I'll do is I'll edit up the recording, and I'll give it to Ed to approve. And when he says it's okay, I'll go ahead and I'll make it available. And what that will do is it'll allow people who are, if there's something that you missed or that we didn't cover in detail slowly enough for you to hear, you'll be able to listen. And I think that'll make things a lot easier. There's a lot of information that's covered, and I think also sometimes if you're working with a co-producer and they don't understand, you watch this presentation and you've been sort of thinking about maybe you don't need all of the different kinds of insurance, or you don't know what it's all for, and you've got a co-producer or somebody you're working with who's trying to sort of cut corners, or you're a UPM or a line producer or somebody who's working with a client who doesn't understand, a director or a producer who doesn't understand what all the insurance is for. This can be an interesting thing for them to watch, because they'll suddenly realize it's protecting them. It's making it so when something bad happens, the delay in the production won't be something that you have to suffer through and that will damage your project. It basically will be covered. And that is an incredibly important thing for ensuring the quality of your production. It protects your production.
I see there's 4 questions. I don't know if you want me to answer those now, or
let me go ahead. I think we already we answered the first one. Does the producer pay the bond company back if the bond company has to cover something? And the answer is yes. The bond company gets the first money if they have to pay out.
Right.
The second
And
thing is, okay.
so let's say you have, which I hopefully explained, you have a distribution deal, and now you've delivered your production to the distribution company, and in that deal, they're going to give you X amount of dollars. But if we've laid out money, we get that money before anything else.
Right. So the next question is, what size film budget? You said if it's over $5 million, what size film budget needs a completion bond? The answer is everyone could benefit from having a completion bond. But if it's under $5 million, you said that
We want to see collateral.
you have to see collateral. So the producer will have to come up with something to prove. If
Right.
over that amount, you're gonna want to see full funding.
We want to see proof of funds.
Proof of funds.
We want to collateralize usually like under that. If you have funding, we'll take a look at it. I mean, I'm here to work with everybody. You know, we're a little boutique versus some of the other people who do completion bonds who are just giants in the field. Nothing wrong with them. I mean, they do a great job, but we'll handle a smaller production. Really anything under $2 million is going to be pretty difficult to get a completion bond. If it is a $2 million production and you're self-funding it, it's to your benefit also to have a completion bond. But then we would need some kind of collateral that you have that money and you have the funds. The process is similar with a few exceptions, because now we want to see your collateral rather than proof of funds.
Right. You also talked about the fact that there's no cost for preliminary evaluation in terms of it's $5 million picture. People bring in all the documents that you said that they have to provide, like the budget and the script and et cetera. They bring those materials to you, and then you provide the letter of intent. And then you go through the underwriting process after there's proof of funds, and because you'll know then that they're serious about actually getting it. And you're not doing all this work for nothing.
Right. We'll do the letter of intent
For free without.
But the actual completion bond, you need to have proof of funds. I mean. Right.
So this is an interesting question. I'm not sure what it means, and perhaps you'll know. How do you share insurance with other production companies? Is that even legal to do?
I'm not sure what that.
So in other words, if you have two production companies that are involved in doing a project, how does it work?
We would insure we insure the project. So if
and would you name the production companies as additional insureds?
Probably.
Right.
We would still want to see the producers and go through all that, but if there are two production companies, yeah, we insure the project, because if each production company has a percentage of this project. That's not really that's not our interest. That's your interest. Our interest to make sure that production, specific production, is covered properly.
Cool. And then one of the things that I think the people are probably going to have other questions, and they're probably not going to think about them until tomorrow. Can they email you at your Rowin address?
Yes, they could email me. They could even call me. I'm willing to sit down with anyone and go through what will help them.
Cool. And what's your telephone number?
424 777 2566. And I sit down with people all the time, because like I mentioned when we started, I come from the entertainment industry, so I'm really there for, you guys.
That's great. It's been amazing talking to you, and you've been incredibly helpful. And a lot of the questions, even though I'm pretty well versed and I'm always sort of been a fan of insurance generally, I learned a lot in preparing to do this particular event and in talking to you, because I hadn't realized how it actually preserves the film against being damaged by somebody getting sick. I mean, it would never occurred to me that somebody getting sick, I knew it would delay production. I didn't realize you could actually get coverage, not just for the person's medical bills or whatever, but also so that the production itself could be covered. And have enough money to go on and shoot as if that event had not happened.
Right. We cover the loss that happens. Like I mentioned earlier to you, we were working on a television series, and the key actress got the flu, and she was out for 3 days. Well, she's in every scene. So the first day, what they did was they shot all the reverses with the stand-in, and after that, they had it was a loss, and the insurance came in and paid that loss.
Right, and if it hadn't been the case, it would be the case that they're just $200,000 less to shoot with. There's just less money, so you're just not going to have as good a production because you don't have as much money. You're like your back's going to be against the wall. Yeah,
it was almost a $300,000 insurance claim.
Right. So I mean, that's like a very powerful reason to have the insurance. It's worth it. It's like you go, I know it's expensive, or it may seem expensive, but the things it's preventing are more expensive. And so I think, and I don't think I always hear people trying to get out of the insurance requirements. And I always find, I'm even more convinced that it's like kind of stupid, because you're putting yourself at tremendous risk. And also you're damaging the ability of your project to be able to be finished on time, on budget, and in the quality that makes it so it can be distributed. So where are you saving money? You're not making a good project.
No, we pretty much are there to make sure that your project and your vision gets done and distributed, and it's done on budget and on time, and that there's no risk to you as the producer. We cover, like I said, one, you're not going to get a camera without insurance. You're just not going to be able to rent a camera. You're not going to rent equipment, sets, things like that, because they're all going to demand that you have insurance, and we cover all that.
It's amazing. Anyway, thank you so much, and I hope people do reach out to you if you have any questions. If anybody has any questions, feel free to reach out to Ed, or you can email me. I'm nancy.fulton@yahoo.com. And I want to thank you very much for coming on, Ed. It was truly amazing. Thank you just for speaking with the group. It's really kind. And then the next day or so, I'll send you off the recording and give you a chance to give me notes. And if we'll make it available to everybody who was interested. Okay.
Okay. Thank you so much for listening to me.
No, it was amazing.
Hopefully, it was informative and not too boring for you. So, thanks, everybody.
Talk to you later, man. Bye, everybody.
Bye.